Good afternoon, everyone, and we are back. Welcome to Finding Stocks 102. I am Shane Alvarez, one of your hosts for today's event.
And I am Andre C., also your host for this webinar, and I'm more than happy to be hosting this event as well.
This is the second iteration of the Finding Stocks series, and I am sure that everyone here today is looking forward to the next step of their stock trading journey. So I am sure that this webinar will be a big help to all of you today, especially for those who want to learn more about technical analysis when finding stocks.
Our speaker for today will teach us more about technical analysis and how we can choose the right stocks to invest in. But before anything else, let's start with the opening prayer. May I call on Mr. Christian Peralta to lead us today's opening prayer.
Let us all put ourselves in the holy presence of God. In the name of the Father, and the Son, and the Holy Spirit. Amen. Heavenly Father, thank you for ways in which you provide for us all. Help us focus our minds on what we are about to learn. Inspire us by your Holy Spirit as we listen to our speaker. Guide us by your eternal light as we discover more about the world around us. We ask all of this in the name of Jesus our Lord. Amen. Altogether, a solemn prayer. I will continue, O my God, to do all my actions for the love of you. Saint John Baptist de La Salle, pray for us. Leave Jesus in our hearts forever. In the name of the Father, the Son, and the Holy Spirit. Amen.
Once again, I would like to remind everyone to please fill up the GALS form, which will serve as your attendance for today's event, and the ARF form as well to be filled up by the end of the program. Just like all of you, I am really looking forward for today's talk. But before we kick this off, let us watch first a video from COL Financial.
Why do we go beyond being just an online stockbroker? Why do we educate millions of Filipinos how to better their lives? Why do we share our expertise? Why do we keep coming up with new ways to empower you? It's because we believe that every Filipino deserves to be rich. This is our why. It's why we do what we do with passion and integrity at all times. It's why we're committed to guide every Filipino in every step of their investing journey towards a richer and better tomorrow. Call Financial for a richer life.
What a great way to start off the event. And you're all excited to listen to our speaker to share his knowledge with us. But before that, we'd love to hear your thoughts about this session. For a quick icebreaker, kindly access this Menti link sent through the chat box or scan the QR codes flashed on the screen. Our question for today is, what comes into your mind when you hear about technical analysis? Kindly type your answers through this Menti website.
I see that a lot of you answered graphs firstly, and now it is increasing. All of your answers so far are quite interesting. Please keep them coming. So majority of you guys say it's all about graphs, and some of you also answered trends, math, charting. I think these are all quite very insightful words. What do you think, Andre?
I truly agree with the audience we have here today. Wow. That's a lot of answers here. Trends, stocks, graphs, patterns. And also I've seen making smart decisions, which is also true. It's creating opportunities for us. Then I see volatility, which is also quite interesting. Wow. All right. All right. We have a lot of answers here. Keep them coming. It's also making money. All right. It's really great to see that a lot of you have the same thoughts or ideas about this question. Wow. Without further ado, let's proceed to the program proper.
Our speaker for today is a graduate from Ateneo de Manila University with a degree in Bachelor of Science in Management Engineering. He is currently an investment analyst in CloudArch Ventures Group Incorporated and a global equity analyst for Cedarside Investments Limited. He also administers two kinds of investment portfolios, long-term investments and short-term investments. Aside from these, he is also part of the 20-man roster for the Philippine national men's ice hockey team. Ladies and gentlemen, please give a warm virtual welcome to Mr. Benjamin Imperial.
Hi, good afternoon, everyone. Can you guys hear me okay? Good.
Loud and clear, sir.
Okay, that's good. Thank you for that intro. Very generous introduction. Can I share my screen already for the presentation?
Yes, sir.
Thank you. Can you guys see it?
Yes, sir.
Okay, good. Okay, so yeah, again, good afternoon, everyone. Thank you for taking the time to come to this talk, and congratulations on deciding to start your journey towards financial independence. Okay, so today's talk is entitled An Introduction to Technical Analysis. So first, I want to give emphasis to the word introduction. Technical analysis is a very broad and complex topic that you will continue learning as you go. And even if you've been in the industry for several years, you're going to keep learning and keep finding out new things about the topic. Okay, so like I said, since this is an introduction, there are avenues for you to learn more. One of which would be this Viber community of our chairman, Edward Lee. So there's a QR code that you can scan or you can type the link. So you can actually join this Viber community and then ask questions to our chairman himself. Every day he sends videos or updates about the market. You can ask him directly, whether it's Philippines, Hong Kong, or US stocks. He will try his best to answer you, and you have the opportunity to pick at his brain. So I think it's a very good opportunity to learn from someone who has almost 50 years of experience in the financial markets. Okay. So before continuing, again, I want to introduce myself. So as your host most generously mentioned, my name is VJ Imperial. I graduated from Ateneo de Manila University. So I'm from the other school. I graduated management engineering. So even if I am from Ateneo, I hope you guys show me some love. I chose to wear green today to like cushion the blow. Okay, so I hope you guys learn from this talk. Okay, so first, how did I get to where I am today? So how did a management engineering student end up trading stocks for a living? Okay, so like many of you, I was very studious back in college. And by studious, I mean I watched a lot of Netflix most of the time. So these are some of the things that I used to watch when I was in college. So if any of you guys have seen these movies, you can react and let me know if anyone else watched these things. So there's Billions, a series, The Wolf of Wall Street, and The Big Short are movies. So these are some of my favorite things to watch. And when I watched them, I was really amazed at how these main characters were. If you're familiar, all of these movies are related to the financial markets. So basically, after watching them, I wanted to be like Bobby Axelrod or Michael Burry. It's debatable whether I wanted to be like Jordan Belfort or not, because spoiler, he ended up in jail. But that's not the point. Okay, so the point is these movies and this series got me hooked on the financial markets. So after watching these things, I wanted to be just like them. Right. So my main motivations after watching these things to get into the stock market was because I wanted a lot of money and I wanted a lot of time. So I'm pretty sure most of you have a grasp of what the stock market is and what it can do for people. So for me, before getting into the stock market, I thought, wow, I could trade for an hour, maybe 2 or 3 hours, 3 hours at most per day. I'd make so much money. For the rest of the day, I'd have so much time on my hands. I can do whatever I want, and I'd have the money to do what I wanted. Emphasis on that's what I thought in the beginning. What actually happened was I had no money, or at least I had less money than when I started. And also I had a lot of stress. So it became stressful because I didn't know what I was doing most of the time. So what changed between back then when I had no money and stress and now? The difference is I learned how to trade properly. And that's thanks to this. This is the FTSR framework. FTSR stands for Fundamentals, Technicals, Sentiment, and Risk. So this is the framework of the Calum Trading Institute, another company that is under the COL Financial Group. So at the Calum Trading Institute, they try to teach you everything you need to know to participate in the financial markets, whether it be the Philippine market or international markets like Hong Kong, Japan, or the US. Okay, so let's break this down a bit. I understand most of you went to the first talk about fundamentals. Is that correct? Or is it general stock trading? Okay, whichever it is, I'm gonna run through all four anyway. So first, let's go with fundamentals. So fundamentals is basically analyzing a stock in terms of its financials, its business model, and other catalysts or developments for a company. So that includes breaking down their financial statements, their income statement, the balance sheet, cash flows, finding out how a company is making money, finding out how much of that is actually going into the bottom line, and how this company is going to grow in the future. This also includes looking at the management of the company, looking at how they run the company and how sustainable this style of management is going to be. So that's the first one, that's fundamentals. Next is sentiment. Sentiment is more in line with analyzing the macroeconomics or the general overview of the market. So this may include inflation or political environment, or even health hazards like the pandemic. Next would be risk management. So risk management as the base of this entire framework, it helps you stay alive, helps you keep your portfolio afloat. It helps you analyze how much you're willing to lose in every single trade, and it helps you manage your exposure to specific industries or specific events. Okay, so risk management helps you stay alive and helps ensure that you live to fight another day when things don't go your way. And lastly is technicals. That's going to be our main topic for today. It's a very extensive topic, but remember, it is only one out of the four aspects of the FTSR framework. Okay? So let's get right to it. So if you guys have attended any other talks about the stock market, I'm sure you've come across this illustration or some variation of this illustration. So the question is, what drives a stock's price? So going back to the basic definition of a stock is part ownership of a company. So as a representation of a company, a stock's price is supposedly a reflection of the company's earnings. So it's very straightforward. If a company is earning, if it's making money, the stock price is also supposed to grow alongside the company's earnings. It's very straightforward, very simple. I wish it was always like that. The reality is that the stock's price is very erratic. It's very volatile. So it's rarely actually equal to its earnings, or it's very rarely equal to its intrinsic value. There are times when the price of a stock is much higher than the intrinsic value, making the stock overpriced, or much, much lower than the intrinsic value, making it underpriced. It is in these moments where we have the opportunity to capitalize on this disparity and make money. Okay? So going back to the question, what drives a stock's price? Okay, so what causes all of this volatility, all of this disparity? So the answer is price is also affected by perceptions, expectations, and emotions. So you might be wondering how that comes into play. So to answer this question, we have to look at a basic description of the stock market that people often overlook. That the stock market is a market. Okay, I'm not sure if you guys have been to like the classic markets like Divisoria or Green Hills, stuff like that. Okay, so if you've ever been there, or okay, maybe a fruit stand, any form of a market. So imagine you walk up to a vendor. The first thing you do after you look around and see what you want is you haggle on the prices, right? There's no such thing as just taking whatever price. You always haggle, try to get the best bang for your buck, right? Okay, so let's say, let's give an example of an apple, like the actual fruit, not a product from Apple. Okay, so let's say that the fruit vendor was able to buy the apples for 20 pesos. Expensive apples, but promise they're super sweet. Okay, so the fruit vendor was able to buy it for 20 pesos. You, as the buyer, the fruit vendor wants to sell it for 40 pesos. Of course, he wants to double his money. It's a sweet apple worth 40 pesos. So you, as the buyer, want to buy it cheaper. You know it's worth 20 pesos. You tell him, boss, 30 pesos lang yan. And then the vendor says, I'm not going to sell it for 30 pesos. I want to sell it for 35. And then you, knowing that it's still pretty expensive, say, no, I want to buy it for 32.5. And then the vendor finally agrees and says, okay, fine, 32.5. And then somebody behind you comes up to the vendor and says, oh, I've heard of these apples. They're super good. They keep doctors away all the time. Diba? So he says, I'll buy it for 40. And then after you find out that these apples keep a lot of doctors away, you're willing to pay a higher price. Then you tell the vendor, okay, I'll buy it for 45. And then the vendor sells it to you. In this situation, you can see how easy it is for price to deviate from its intrinsic value. The apple's worth 20 pesos. Even if the vendor said that this apple keeps doctors away like anything else, at the end of the day, it's still the same apple worth 20 pesos, but it was sold for 45. So this disparity was caused by the value that the buyers put into the product. Same thing with stocks. If you put more value into it and the perception of the market participants change, prices can deviate from its intrinsic value. Okay, so maybe the Apple example is a bit of a reach. So let's look at another example that's a bit more relatable. For some reason, this fruit vendor also sells medical masks. So I'm sure you guys experienced this last year when COVID was picking up pala. Masks that usually sell for what, 50 to 100 pesos per box. Everyone wanted a mask. Everyone thought that masks were suddenly running out. So they started chasing the price of masks. And sellers, seeing that there was a extreme amount of demand, started selling masks for a higher price. It even reached 500 maybe or more at some point, depending on who you're buying from. Okay, but at the end of the day, it was the same mask, same intrinsic value, but people were willing to pay more and more. So that's the disparity that I'm talking about. So like any other market and like any other product, the stock market is full of stocks that can have price disparity because of the perception and emotions of the market participants, so the buyers and sellers. So to sum it up, the psychology and emotions of market participants is what causes prices to deviate from its intrinsic value, and it is what provides the opportunity for us to capitalize on these disparities. Okay, so I hope everything's clear so far. Can I get a wow react if everything's clear? Okay. Okay, let's keep going. So there's a cute little infographic about the emotions in the stock market. So first we start off optimistic and excited, thrilled, and euphoric. Of course, everyone is only happy when they're making money. If you're happy when you're losing money, then I guess this graph isn't for you. But personally, I can relate to this. When prices are high and when I'm making money, I'm really happy. But right when you're making the most money is usually when the markets start to turn. And your happiness turns to anxiety, denial, fear, desperation, so on and so forth. Okay. So once you hit rock bottom, once you give up on the stock market, that is also usually when prices are ready to rally and go back to its highs. Personally, my favorite emotion in this roller coaster is relief. Can you guys see? Can you guys see my mouse when I move it around? Yeah, okay. So this is my favorite emotion, relief. So why is it my favorite emotion? So let's say you bought a stock early on, maybe in the optimistic period of the last cycle. So you go through the entire roller coaster. You're happy you're earning money, you're sad you're losing money, you're desperate at the bottom, and then biglang relief. This is my favorite because the first thing that comes to mind at the relief stage is, I knew that was gonna happen. That was part of the plan, right? So that's why relief is my favorite. But of course, it wasn't part of the plan. You didn't know that was going to happen. And then the cycle repeats. So what's the importance of recognizing that it is a cycle of market emotions? So because it's a cycle, technical analysis would allow us to forecast potential outcomes and determine probabilities. Again, keywords for this slide are potential and probabilities. Okay, so what's the importance of that? So first, forecasting potential outcomes. You're not forecasting a single outcome. Instead, you're forecasting every possible outcome for a stock's price to go to. For example, a stock is at 50 pesos today. Potential outcome is 75. Yes. Potential outcome, 25. Yes. Everything between and everything beyond are also potential outcomes. But forecasting a potential outcome means you're trying to recognize and you're trying to prepare yourself for the possibility of a price going in the direction that you want or going in the direction that you don't want. Either way, you have to be mentally prepared and set your expectations for either outcome or any outcome. Okay. And then this goes hand in hand with determining probabilities. Although everything is a potential outcome, there are some outcomes that stand out, of course. For example, a 50 peso stock, is there a better chance of it going to 75 the next day or a better chance of it going to 25 the next day? So once you have your potential outcomes, you have to determine the probabilities of these outcomes. And that's when you get the opportunity to make the most money. Okay, so why are we able to forecast outcomes and determine probabilities? So the premise of technical analysis are these three. First, price discounts everything. Second, prices move in trends. And last, history repeats itself. So first, I want to talk about price discounting everything. If you guys are not familiar with the term discounting discounting, it means when events happen or when information is given to the public, this is reflected in the stock's price. So like I said a while ago, the stock is supposedly a reflection of the company's earnings. So any release in information that could affect a company's earnings or potential earnings should be considered and discounted into the stock's price. So for example, if a company releases an earnings report and says they grew 50% year on year, but the stock is pricing in a 30% growth rate, then that means that there's a disparity and the stock price should reflect this new information and go up. So price discounting everything. Another example could be maybe management saying, okay, our product's going to be like the next Apple. Every household in the world is going to have at least one of our products. Okay. So the management says that we're going to be growing 30% year on year for the next 5 years. But then let's say market participants, the buyers and sellers say this forecast is too conservative. I think that they can grow at 80% every year for the next 5 years because their product's revolutionary. Price would discount what the buyers believe the company is really worth. So our job when it comes to technical analysis is seeing these price movements and determining whether or not new information is discounted in the price or whether it is justified, and determining if it is worth participating in or not. Okay. Next premise is that prices moves in trends. There's a quote that says, "The trend is your friend until it bends." What does this mean? So later on, we're gonna talk a bit more about trends. So identifying trends, the types of trends, and how to draw out trend lines. But for now, what you should know is that when prices are moving in trends, it is more likely for it to continue moving in this trend unless there is a big change in the company or a big change in the market environment. Okay, so if a stock is moving up, it will probably keep moving up. If a stock is going down, it is more likely that it will continue going down than reverse and go up. Okay, and lastly, history repeats itself. This is in line with the cycle of emotions that I was talking about. So right after the relief stage, you go back into your positive, optimistic, and euphoric stage. So as a cycle, everything happens again and again. So why does history repeat itself? Well, technical analysis, as I said, was based on the understanding that the market or prices of stocks are driven by human psychology and emotions. The thing is, the same psychology and emotions that we have today as market participants is the same psychology and emotions that market participants 50 years ago, 40 years ago, or 30 years ago had. Okay? When prices are up, they were happy. When prices were down, they were sad. Same thing today. When prices are up, we're happy, and when prices are down, we're sad. Right? So nothing's changed. So history repeats itself. So we can use history to guide us today when we recognize patterns that have happened before or events that have happened before. And then we can tailor our approach after learning what happened before in order to benefit today. Okay? So that's the premise of technical analysis. Everything clear so far, I guess? Okay, so even if your cameras are off, I trust that you guys are enjoying and learning. Okay, so let's get down to the nitty gritty. Okay, so first, what's in a price chart? So on the right is a chart of Ayala land. Ali, I hope most of you are familiar. If not, we can break it down a bit. So first, the x-axis would be the time frame. Y-axis would be price. Okay, so usually the most common time frame that we use is the daily chart. So that means one candle represents one day. A lot other people use the weekly chart or monthly charts if they're a bit longer term. Other people who are day trading use 5 minutes, 10 minutes. 1 minute's kind of wild for the Philippines, but maybe if you're wild, you use the 1 minute chart. Okay. So next on this chart, you also have two technical indicators. You have moving averages and volume. So volume, we're gonna look into that a bit more later. Also, the technical indicators, we have two, the exponential moving average and the simple moving average. Well, we're also going to look into that a bit more later. So on the bottom left, I put an explanation about candlesticks if we have some viewers who aren't too familiar with the concept. So just for the sake of being on the same page with everyone, let's review it a bit. So more often than not, it's green and red. Green represents an up day and red represents a down day. So green means the stock closes at the price higher than it opens. So for example, if Ali opens at 30 pesos and closes at 32, it will be a green candle. And vice versa, if it opens at 32 and closes at 30, it would be a red candle. Okay, so the beauty about using candlestick charts instead of using maybe line charts or area charts is that you get the whole context of each trading day or each trading time frame that you're using. Okay, so these candlestick charts actually tell you a lot about what goes on in the stock market at any given time. Okay, so our first major portion about technical analysis is trends. So the types of trends. So we have three major trends. That's up, sideways, and down. Fairly simple. Okay, so sideways trend, you can also refer to it as trendless. Uptrend, if it's going up, it's in an uptrend. But how do we identify trends on stock charts? And we can do that by drawing trend lines. Okay, so first, how to draw a trend line for an uptrend. So first, what you do is connect the highs and the lows. So what you're connecting are the highs of the pivot points of every move and the lows of the pivot points. Okay, so you'll be able to tell if you're in an uptrend if you have higher highs and higher lows. Okay, fairly straightforward. All right, processing. Okay, next, we got drawing trend lines for downtrends. So instead of higher highs and higher lows, you have lower highs and lower lows. Okay, you just have to connect the pivot points of every move, and then you'll be able to see in what way the stock is trending. Lastly, trendless. When it's forming some sort of square or some sort of box, you'll be able to see that there is no clear trend or it's going sideways. So you have equal highs and equal lows. Okay, so it should be a bit clearer when you look at some examples. So again, this is a chart from Ali, Ayala Land. So the ideal trend line rarely comes up. So what we like to say is you draw trend lines with a crayon and not with a pencil. Do you guys get that metaphor? So essentially what it means is if you're drawing with a pencil, your lines would be a bit more precise and you'd end up having trend lines that are too accurate. On the other hand, if you're drawing with a crayon, instead of having precise lines, you're gonna have areas, right? You're gonna have thicker lines, so you have like an area for the trend. Okay, so there's another saying. I'm full of sayings, man. Okay, so there's another saying that goes, it's better to be vaguely correct than to be precisely wrong. Okay, so that also applies to the concept of drawing trend lines with crayons and not pencils. Okay, so in this chart, you see two different trends. For a few months, Ayala Land was trending upwards. And then after the uptrend, it started trending downwards. Okay, look at some more examples. Oh, on the big picture though, even if it had two different trends, if you draw a big picture trend line, you see that Ayala Land is slowly going up, even if it's a very shallow degree, it's still going up over the long term. Okay. So next we have Semirara Mining, SEC. Here we see that if you draw some trend lines, you will see that it was moving sideways for just 3 months. Yeah, 3 months moving sideways, moves lower, then sideways again for 6 months, and then goes lower again. Again, if you are a bit of a longer term investor or a longer term trader, I guess, you can draw a trend line for the bigger picture. And generally, even if SEC was moving sideways for 3 months and 6 months, it was still in a downtrend over the bigger picture, over the longer term. Okay, so now that we've finished our trend lines, it's time to go to our next major concept, that is supports and resistances. So with this funky little illustration, I think you can understand the concept a little bit already. So resistances shows sellers or market participants who are already holding the stock and are just waiting to sell, while support shows market participants who are actively buying and are holding prices at a certain price level. So to review, so we have sellers and we have the buyers. Sellers are the resistance lines and buyers are the support lines. So when prices are having a hard time penetrating or breaking out of a resistance line, that is because there are enough sellers to overwhelm the buyers. Okay. On the other hand, when you have enough buyers purchasing a stock at a certain price while sellers are selling it, they're able to form in an area of support. Okay. So Again, this boils down to supply and demand. Just like our example in the beginning, the buyers show demand while the sellers show supply. So if you guys remember my beautiful example earlier in this talk with the apple, if there were 2 apples instead of 1, and the second buyer wanted to buy it more expensive than the first, would the first person care and raise the price that he was buying at? If he was able to buy the apple anyway at the price that he wanted, he wouldn't have haggled also and bought it for more expensive. So when demand overwhelms supply, that's when prices start to push up higher. And that's when buyers overwhelm the sellers. And when there's more supply than there is demand, the sellers are able to overwhelm the buyers, and then prices are expected to move lower. Okay, I hope that's a little clear. I sneaked in a bit of econ into my stock trading talk. Okay, so let's keep it going. Okay, so next we have another example for supports and resistances for AC energy. Again, like trend lines, supports and resistances are drawn with crayons and not with pencils. Okay, so an area of support and an area of resistance is very different from a support line and a resistance line. Okay, so this ASEN chart, if any of you guys participate in the market, you know about ASEN. Okay, so but this is last year, I think, before it went into this monster move. So it goes into a long consolidation. And then before every time it moves up higher, it goes into another form of a consolidation. So it moves sideways for a few months or a few weeks, and then moves higher. So it's very clear which are the areas of support and which are the areas of resistances in this chart. Okay. So if you guys see my mouse, you see that once the prices breaks through a resistance, that's when you can expect it to move into a new area. Okay, so I have a few more examples here about supports and resistances. So here we have SEC again, semi-rare mining. Again, we have a area of resistance and a area of support. Okay, so basically these supports and resistances are basically sideways trending or trendless stocks, but also you can have supports and resistances that are not horizontal. You can have them diagonal as well. So trend lines could also act as a form of support and resistance. Okay, so these are just a few examples of supports and resistances. Okay, so another aspect of supports and resistances are breakouts and breakdowns. I think I mentioned it a bit kanina, spoiler. Okay, so when you have a resistance or an area of resistance, so this is where the sellers are overpowering the buyers. But once the buyers are able to overpower the sellers or demand overtakes the supply, you'll expect a breakout in prices. So breakout meaning prices go through the resistance into new highs or into a new area of support. Okay. On the other hand, we have breakdowns. As college students, you guys are very familiar with breakdowns, I believe. Okay. So a breakdown is when prices go below the area of support. That is when there are not enough buyers to support price anymore. So nobody wants to buy it anymore, but sellers are looking to get out and sell the shares they are holding. So that's when stock prices break down. As sellers continue to sell, but there are no buyers who are accommodating these shares. Okay, so we have some examples. Again, same example, ASEN. So we have breakout. So we have an area of resistance. You have breakout, and then another consolidation or another sideways pattern. Breakout again once it goes through the resistance, and then another, so on and so forth. Okay, it's repetitive. Remember, history repeats itself, everyone. Okay, keep learning. Okay, so next, SEC, semi-rare mining. Again, we have an area of resistance and an area of support. Instead of breaking out of the resistance this time, it breaks down, breaks the support and breaks down. Stock plummets from 35 all the way to 30. Okay, it forms another area pattern, so another support and another resistance. Okay, it's unable to break through the resistance. Instead, it breaks down again through the support, goes lower. Okay, fairly. Is everything okay? Are you still with me? Okay, don't worry. We're gonna have a lot of time for Q and A's. I gave more time for Q and A rather than me just talking. Okay. So another aspect of supports and resistances is role reversal. Okay. Technical term polarity, meaning once you break through a resistance, that area becomes a support. Same thing on the other side. Once a support is broken, it becomes a resistance. Okay. So let's look at ASA. So in this area of resistance, once it broke through, the new area pattern has a low around the same level as the area resistance. And then when it breaks out again, the new area low, because the new support is the previous area pattern's resistance. Okay, as you see again. So it's the same charts, but reflecting different things. So old support becomes new resistance, and old resistance becomes new support. Okay, very repetitive. Okay, next we have technical indicators. So I remember in your icebreaker, I had yeah, you guys put a lot of terms that reminded you of technical analysis. I think some of my favorite ones were lines and wow. Okay, so I think the wow comes from technical indicators. If you guys have seen some day traders or some proprietary traders who are on TikTok or YouTube or Instagram, they probably post charts with a lot of lines, a lot of indicators, so many oscillators and everything. So, of course, first reaction is wow, lines, right? So yes, I'm with you. Whoever wrote that, that's how I felt about technical indicators as well and trading in general. But today I'm only going to give three of the what we believe is the most essential and most beneficial technical indicators to use when you're trading. Okay. First is volume. Okay, so I touched on volume a bit earlier. So it's very straightforward. The volume is a reflection of the quantity traded per day or according to whatever time frame you're using. So if you're using a monthly chart, the volume reflects the total quantity of stock traded in that given month. But for the sake of the rest of this discussion, we're only going to be talking about daily charts, okay? So the volume reflects how much a stock was traded within the day, okay? So how do we use volume? So volume we use to sort of confirm what price is already telling us, okay? So for example, a stock moves up 5% on low volume. We're not very sure if the stock can maintain this move, this up move or increase, okay? But if that same stock moves up 5% but on significant volume, we are more sure or there are better chances for this stock to continue upwards and maintain its up move. Okay. Okay, that should be a bit clear. Okay, so let's go into some examples. So DNL, finally a different company that's not Ali or SEC. Okay, DNL Industries. So for example, this small resistance or pattern had a breakout day from 7.5 to what's this 7.6, 7.7. Okay, this is on relatively more volume, but not very high volume. Okay, so when that happens, should we be expecting prices to surge higher the following day, or should it fail to follow through and go back down? On this much volume, it's hard to say for sure if it will sustain the move or not. Well, in hindsight, it wasn't able to sustain its move, right? It went back below the previous resistance and then formed another pattern for the next 3 months. Okay. So the next time that DNL broke out around start of June was in much, much more significant volume. Okay. Yeah. If you look at the circle here, you have high volume and you have a breakout day. So when that happens, do you think DNL can sustain this up move better than the breakout back in March? So that's what volume is there to tell you. So volume tells you that there's a significant number of people or buyers who are pushing the stock's price further. So going back, remember, it's always good to think about the essence of the stock market. So think of it in terms of buyers and sellers. So when there's high demand and there are a lot of buyers who are buying the stock and hoping that prices go up further, this should reflect in volume. If there's little volume, that means there are not a lot of buyers there to sustain the up move. Okay. So once you see confirmation of the price movement with volume, you should be fairly more confident in participating in the stock and preparing for up moves like this. Okay. Okay. Next, we got Jollibee, JFC, holding a support level last year, 2 years ago, maybe 2 years ago. The pandemic has messed with my sense of time. Anyway, so start of May, you see prices break down from a level of support and on significant volume, which is the volume is higher than several months before. Okay, so prices break down and then they form another area of support. And then again, when it breaks down through that area of support on high volume, prices tumble and yeah, they just keep tumbling. Okay, so that's why volume is very important when you're looking at the chart. It helps you confirm what you're seeing in price. Okay, if you remove volume from your charts, you might still be able to trade, but you wouldn't have the same conviction and the same, let's say, accuracy as if you were using volume alongside with price. So a lot of experienced traders or very experienced market participants can actually get by only using price and volume. Like for example, our boss, Edward Lee, with 50 years of experience, you can just give him the chart, volume, ask for an indicator, and then he could draw it out for you. The same thing with the CEO of Kalum Trading Institute and CTS Global Equity. You just give them a chart with volume and price, they'll draw out, they'll give you, if you give them an EMA or the MACD or something, they'll draw it out for you. Okay. So moving forward, I want you guys to keep that in mind, that the rest of these indicators are only there to help us and assist us. Okay. So the next few that we'll be going through are moving averages. So there are two types of moving averages. So we have the exponential moving average and the simple moving average. Okay, so what's the difference with the exponential moving average and the simple moving average? So the simple moving average is simply the average of the stock's price over a certain amount of time. So basically it reflects the average price of a stock over a given period. So for example, I want to use a 100-day simple moving average. So that simple moving average would reflect the average price over 100 days. On the other hand, we have the exponential moving average, which instead of simply adding and averaging all of these days, it adds more weight to the more recent days. So why is that significant? For example, over 100 days, let's say a company like Jollibee, 2 weeks ago, 14 days, 2 weeks ago announces that we acquired a new restaurant. Recently, they acquired 100% of Tim Ho Wan, a Chinese restaurant, right? So if you guys are familiar with that, so that changes the business of Jollibee. It changes the narrative. Okay, so the price the more recent price of Jollibee should have a higher influence on the moving average compared to 100 days ago when this information wasn't made public yet, right? It's quite intuitive, right? That giving more weight to recent developments should help us in our decision making. That is why, for us, we usually use the exponential moving averages instead of the simple moving averages. But of course, this is not like a generalization, okay? So if you guys are more long term, it's okay to use the simple moving average. So exponential moving averages are a bit tighter around stock price than simple moving averages. So simple moving averages would appear smoother. In the next slide, we're going to see an example. So here, so the red line is the exponential moving average. So this is the 100-day EMA, while the blue line is the 100-day SMA, so simple moving average. So right off the bat, you can see that the red line is a bit closer to price. You can say that it's truer to price, but the blue line, which is the SMA, is a bit smoother. So again, you can look at this as a two-edged sword. On one hand, the EMA reflects more recent developments more accurately, but also it reflects short-term volatility that is driven by emotions or psychological biases also more closely, right? So the SMA is able to, at some level, eliminate the noise of volatility that's caused by the emotions and psychology of market participants, okay? So it can work both ways. So for you guys, I'm not sure which one fits your trading style more, but that's up to you to find out, okay? So EMA and SMA. So different types of moving averages. So you can use virtually any time frame that you want. But for us, we usually use the 20-day, 50-day, and 100-day. But you can use anything you want. You can use 22-day, 51-day, 99-day. But I mean, it's kind of weird, but it looks nice when it's 20, 50, 100. But okay. So the 20-day moving average shows you the moving average for a short term, while the 50-day shows you a medium term moving average, and 100-day shows you a long term moving average. Okay, so usually we use these three to get a general overview or picture of what short-term traders or participants are doing, what medium-term participants are doing, and what longer-term holders are doing. Okay, so let's look at an example. So there's the 20, 50, 100. So another thing that moving averages can do is that they can also act as an indication of the trend. So if you don't want to draw your trend lines, you just want it automatically there, you can follow the moving averages. So if price is above the 20-day moving average, you can say that over the short term, price is in a uptrend. So if it's above the 50-day, you can say over the short term, it is, over the medium term, it is in an uptrend. And again, if it is above the 100-day, it is in a long-term uptrend. But you also have to consider how these moving averages come into play with each other. If the 20-day is above the 50-day, and if the 50-day in turn is also above the 100-day. So this means that the stock is in a uptrend. But if the moving average start to intertwine and cross over with the 100-day overtaking the 50 and the 50-day overtaking the 20-day, then you know that for sure that the stock is in a downtrend. But again, remember that these indicators are only there to assist us when everything that you need to know is already in the price chart. Okay, so if you see that the stock is in a downtrend based on its price, but indicators are telling you otherwise, you always prioritize price. Okay. Okay, so next is, this is the last technical indicator that I'm going to be discussing. But in the Q&A, if you have other questions, you can mention it. Okay. So the moving average, convergence, divergence. So there are three parts to the MACD. First is the MACD line, which is the line that is black in the illustration, the signal line, which is the blue line, and then the MACD histogram. So I'll give you an overview for the way that these lines are achieved, but do not feel pressured to fully understand it or fully memorize it, because most trading softwares, especially COL Financial, which has a fantastic trading software, charting software, for only 1,000 pesos, you can open a COL Financial account, and it comes with all of these perks. Anyway, so the MACD line is achieved by subtracting the 12-day moving average from the 26-day moving average. Okay, next is the signal line, which is the 9-day moving average of that MACD line. Okay, again, so it's a little confusing. The MACD line is the difference with the 12 and 26 moving average, and the signal line is the 9-day moving average of the MACD line. Next, the MACD histogram is the difference between the MACD line and the signal line. Okay, so it's going to be a little bit clearer with the example. So you don't really have to know the nitty-gritty of how to get the MACD, because again, your charting software should be able to give it to you automatically. So first way that we can use the MACD line is to identify the trend of a chart. See, so for example, again, back to Ali, if the MACD and signal line are below the zero line, so there's the zero line straight down the middle. If it is below, more often than not, it is in a downtrend. If it is above the zero line, it is probably in a uptrend. Okay, so that's one way that we can use the MACD. Clear? Okay, so another way that we can use the MACD, which is very useful that not a lot of people actually or remember to use it as, is to determine convergence and divergence. So for the sake of uniformity, convergence meaning the MACD and price align and tell you the same thing, while divergence means price is telling you one thing and the MACD is telling you another thing. Okay, so when the signals of MACD and price converge, they are convergent, and if they are divergent, that means price and MACD are contradicting. Okay, so here's an example. So JFC, late October to early November, makes a high late in October, and then another high early in November. Okay, so the line I drew is the prices trend, while the MACD also made a new high over this period. So in this situation, it's convergent, meaning the move has some strength to it, and the probability of prices continuing this trend are quite good. Okay, so this is a good sign if you're looking to buy. So the next one in the same chart though is an example of divergence. So when prices move from the November high to the December high, although it does make a new high, the momentum or the energy behind this move is weaker, as shown by the MACD. Okay, so MACD is going down while price is going up. So it could be a signal that this new move up higher is not going to be sustained anymore. So hindsight tells us that we were correct in identifying that divergence. But if you look at in the moment, if you see that MACD and price is divergent, you should be a little bit more cautious moving forward. Okay. Next, and I believe last thing about MACD is that it could also act as a signal that tells you that a stock that is moving sideways could be going into an uptrend soon. But of course, it also means it could be going into a downtrend as well. So how does MACD tell us that? So do you remember when I told you that MACD below zero means that it's in a downtrend, and MACD above zero could likely mean it's in an uptrend? Well, if MACD is right on the zero line, it becomes a situation wherein price could go either way. Okay, so here's an example with AC Energy, ASEN. So MACD crossing the signal line at the zero line here gives us a signal that from this consolidation or this sideways area pattern, that prices could move up higher. Okay, so prices do surge a bit, but comes back down and goes into another area pattern. But again, using the same process, we see that the MACD quiets down again on the zero line, and then you have another opportunity to buy before the stock either breaks out or breaks down. Luckily, if you're able to buy, prices do surge and continue to surge for the next few months, I believe. I think this is the start of, oh no, this is towards the tail end of its move. Okay, so that's the last way that you can use MACD, at least in this discussion. That's the last thing that I'm going to discuss. Okay, so quick review. We went through how to identify, how to spot trends, how to draw trend lines so that the trends become a bit clearer. So we'll review. We have uptrends, downtrends, sideways trends, or trendless charts. Next, we have supports and resistances. Always remember to look at supports and resistances as the underlying battle between the buyers and the sellers. Okay. And lastly, we gave you a toolbox of 3 indicators that we use, and hopefully what you can use also in your trading or investing to benefit your trading. Okay. But of course, there are so many other indicators. I'm not sure if you guys use them. You have stochastics, you have Fibonacci's, you have Ichimoku clouds, all of those, all that jam. Okay, so there are other indicators. If it does fit into your trading system better than the indicators that we gave or we discussed, then you should use those. But generally, these 3 basic indicators should be enough for you to have a good foundation of technical analysis. Okay, but again, I just want to reiterate and remind you all that technical analysis is only one of the 4 segments of trading and investing that the Calum Trading Institute has identified. So if you really want to be profitable and successful in the stock market, I suggest you do go through every portion of this framework, okay? But technical analysis is also, of course, a very interesting topic, and I'm happy that you guys decided to attend this talk and try to learn a bit. So if you guys have like the desire to stay up to date and knowledgeable about the local market, you can join this, join through this link or QR code here to join the weekly recap of COL Financial. Okay, so I'll give you guys some time to take this. Actually, I can send also all this information to your organizers and they can give it to you. Next, again, what I told you, join the Vira community of our chairman. It's a great opportunity to pick at his brain, and he's more than happy to answer any of your questions for sure. Okay, and that's all from me. I hope you guys learned a lot, and I'm ready to take some questions.
Thank you very much, Mr. Benjamin Imperial, for that truly insightful discussion about technical analysis. It was definitely great to learn the different aspects of technical analysis and when it comes to picking the right stocks to invest in. Now I think I can analyze my stocks even better to maximize my own personal growth as well. And I'm sure a few of you guys have some questions to ask Mr. Benjamin Imperial due to the very detailed and very intricate discussion that he has. So please take this opportunity to ask him your questions. You can raise your hand or you can also chat your questions in the chat box. Thank you.
Feel free to ask questions if you have. Oh, so here we have our first question for the Q&A received in the chat box through private message. So our first question would be, is technical analysis used for short-term trading only?
Okay, good question. So technical analysis is usually more useful for short-term traders because, like I said, for example, let's go back to the difference between exponential moving average and simple moving averages. So if you're a market technician, you really want to squeeze out every percent change in a stock's movement, right? So if you're you're a short-term trader, you want to be very precise with when you buy, when you enter a position, and when you sell or when you exit a position. So when you use technical analysis, you get a little bit more accurate or a little bit more precise with your entries and exits. That's when you can maximize your gains. But as an investor, you don't really you're not too picky about maybe a 1 to 2% give and take. So you're less precise or less concerned with those movements. But of course, technical analysis can also help long-term traders. For example, if a stock is in a long-term uptrend and then suddenly the uptrend is broken and then it goes into a sideways pattern, it could signal the long-term investor that maybe it's time to reevaluate the company and get out, or reevaluate the company or use this opportunity as the stock moves sideways to add to your position. So technical analysis can play a role to both short-term traders and long-term investors.
All right, sir. Thank you. Before we move on to the next question, someone's asking if can we see the Viber again, sir?
The Viber?
Yeah, the Viber QR code.
Okay, I'll share screen again, or
yes, please.
yeah. Here, there's a Viber QR code. Okay.
All right.
I got a question. What brokerage do you recommend to purchase U.S. securities? Okay. Buti na lang you said U.S. securities. If it's Philippine, it's COL. You know the answer. Okay, so U.S. securities, personally, I use Interactive Brokers. I think that's a fairly good platform for you to use. There are a bunch of other platforms, but personally, I can vouch for Interactive Brokers. I'll also show the weekly newsletter for anyone who wants to join.
So we have another question through private message. They were asking, which time frames for charts do you prefer personally the most?
Okay, personally for time frame, I only use the daily and the 5-minute for intraday. So for the daily chart, it's pretty much the most basic chart that you could use. It shows you the price movements within a day, and then the 5-minute chart is a good way for you to see how prices are moving within the day. So if you trade in the Philippines, for example, you know that some stocks could be quite illiquid or low volume. So going intraday might not be of much help. But for stocks that are a bit more liquid, like the most actively traded stocks, the 5-minute chart would still look very clean, and you could still benefit from using the 5-minute chart. So yeah, just the 1 day, the daily chart, and the 5-minute chart, personally.
I see. Thank you very much for that insight. Andre, do you have, did anybody message?
Yes, someone, I got a private message again. Is there a way for us to be able to tell if a stock is about to break down from its resistance?
Okay, so how can we tell if a stock is about to break down or break out? Well, either way, a breakout from a resistance. Okay, breakout from a resistance. So it's a bit harder for you to anticipate a breakout. That's why if you go deeper into technical analysis and you actually go into, let's say, formations and setups, the, the more common setup is the pullback after the breakout. So when prices break out through an area of resistance, you wait for it to go back down to that area of resistance, which has now become an area of support. And that's when you buy the stock before it runs back up into the new area of resistance. Okay, but if you want to be buying to anticipate the breakout from the resistance, keyword anticipate, so your probabilities of getting through that resistance is not, I wouldn't say low, but it's not high. Okay, so if you're anticipating, you have to consider that, again, you are anticipating it and there's a chance that it doesn't happen. So
Alright.
yeah.
Someone wants to ask, like, may I ask for this participant to unmute yourself? Oh wait.
I have a few questions on direct message. Let's try to answer these also. So what is the minimum deposit for a BKR? So interactive brokers, I don't think there is a minimum deposit, but there is a minimum if you want to be actively trading. It's a bit steep. I think it's 25,000 if you want to be actively trading, but to a minimum to open, I'm not sure. I don't think there is one, but yeah, I think they post it on their website for account opening. Another question, what are some of the more accurate candle patterns to spot for a bounce? Okay, I assume the person who asked this is a active participant in the stock market, because if you're looking for bounces, you probably know what our market looks like today. Okay, so an accurate candle pattern to spot for a bounce. If you search on Google, or yeah, I think if you Google it and go to the Google images and search 2-day candlestick reversal pattern, you will be able to see candle patterns that are higher probabilities for bouncing up. So that's when there is a green day engulfing a red day, for example. So it's a little bit hard to explain it in words. So like try to visualize as I describe it. So a red day, a downtick day, engulfed or covered by a green uptick day. So that is a good sign of strength, and it's a high probability of bouncing the next day. Okay. Yep.
I see.
Maybe
So some
go
Oh.
ahead.
Okay, so someone also private messaged me, and we're asking, are there any books you recommend for trading and for technical analysis in particular?
Okay. Books for trading or technical analysis, particularly, you can look at any of Mark Minervini's books. If you're familiar with Mark Minervini, he has a book. The first of his series is called Trade Like a Stock Market Wizard. I think that's one book that would set you up well for technical analysis. There are also local books. I know COL Financial has a ebook that I think we can send out also to the organizers if you want, 5 strategies to beat the market. And there's another book made by a local called The Trading Code. That's also a good one if you guys want to read up and get familiarize yourself with some technical aspects.
Sir. May we request again for our participant and Ketan to kindly unmute yourself.
Hi, Sir Vijay. Thank you so much for that talk. That was really insightful. So actually, I'm also trying to get into the stock market. I'm kind of starting out, and I was wondering your thoughts on technicals versus fundamentals.
Okay, thank you, Enrique, for that question. I think since you're asking this question, you're kind of torn between your fundamental analysis of a company, whether you like their financials or their business model, while its chart is in a downtrend. I think that could be the experience you're coming from. So which is more important, fundamentals or technicals? Well, the answer is it depends. So if you are holding for the long term, the fundamentals of a company should correct the price action over enough time. Okay, so for example, a company is in a downtrend right now, but it is earning, it is growing, and it is sustainable. Over time, you should see prices rally and correct and reflect its actual intrinsic value. So that's when fundamental analysis comes into play more than technical analysis. On the other hand, technical analysis is for the short-term traders. So these small fluctuations and deviations from intrinsic value, whether it's overvalued or undervalued, technical analysis is better to capitalize on these situations. So yeah, it depends. I hope I answered your question, Enrique. So I have another question on the direct message. The question is, I find myself holding the stock and just praying that it goes up whenever stock prices dip. How do you set a cut loss when you are trading? And how do you discipline yourself to follow the cut loss price you initially set? Okay, this is an excellent question. I found myself feeling the same way in the beginning. Okay, that's why I told you my favorite emotion is the, relief. After holding the stock and praying it goes back up, when you reach that point of relief, first thing you say, I knew it, right? So, how do I set a cut loss? So it depends on the setup. So for example, with the knowledge that we have from this stock, if you buy on support, my cut loss would be when this area of support is broken. Okay, so if, for example, my area of support, remember, draw using a crayon, not a pencil. So if my area of support is in 20 to 18 pesos, okay, if prices are at 20, I buy. If prices dip to 19 or 20, I can give some leeway. But if it breaks down from 18, you should be out. Okay, so why should you be out? Every time you enter a trade, you're setting an expectation. Remember, you forecast potential outcomes. So the outcome could be from 20, it could go to 25, or it could go to 15. You should be ready for either outcome. So if it goes up, you should be ready to sell to take a profit. If it goes down, you should be ready to cut your losses to limit the blow. Remember, it's risk management keeps us in the market, keeps us alive, and allows us to fight another day when we are wrong. So the next part of the question is, how do you discipline yourself to follow the cut loss price you initially set? That is the name of the game, discipline. Okay, if you're not disciplined and following your rules and your trading plan, it's going to be very hard to make money in the stock market, right? Or if you follow your plan today and tomorrow you don't follow your plan, it's going to be very hard to be consistent and continue making money in the stock market. So how do you discipline yourself? It all boils down to whether you are seriously thinking about making the stock market a sustainable source of income or a way for you to grow financially. So if you're serious, you have to treat trading or investing as a business. And like in any business, you have to be disciplined. You have to get to work. You have to do your due diligence, and you have to do everything you plan, right? So discipline plays a big part, maybe even the biggest part. So how do you discipline yourself? It's up to you. Okay, some people they look for accountability partners or groups, trading groups, wherein you guys share your results for the week or for the month, and then everyone holds each other accountable. They remind each other, hey, what's up, dude? Why aren't you following your cut losses? Why aren't you following your plans? Like if prices go up, you're supposed to sell, but you still held. Yan tuloy, bumalik yung price. You didn't earn na. So one way to follow your strategies is by keeping yourself accountable.
Right, sir. We have another question coming from our participant. About crypto. What would you advise if we invest on crypto during the hype times? Like, should we withdraw what's left or wait?
Okay, that's a good question. Um, so cryptocurrencies, a lot of people are attracted to cryptocurrencies because of the high upside that it could give, right? As a highly speculative asset class, cryptocurrencies are very risky. Okay, so one other aspect that people like about the risk is the higher the risk, the higher the reward. But of course, when you expose yourself to this kind of risk, you should be willing to face these consequences. So if you buy at the highs, if you're not ready to go through the emotional roller coaster, as seen in the first slide, um, and if you are still willing to hold through and you believe in the story of cryptocurrencies, then by all means you can hold it. But fundamentally, cryptocurrencies do not have much to dissect. They don't have the cash flows that companies do. They don't have the business model. Most cryptocurrencies are banking on the narrative of becoming the world currency. Okay, so if you guys are a firm believer on cryptocurrencies becoming the world currency, then holding it for long term, retirement maybe, depends how long it would take for cryptocurrencies to become the currency of the world, you could hold it. But if you're asking if you're asking me this question because you bought at the highs and you're contemplating whether you should take it out or not now, then I think it's up to you. There are other assets like stocks. There are other stocks where your money could be more efficiently used. They could be you could be earning more from this money if you take it out, or if you still want to keep it in cryptocurrencies. By all means, it's your choice. But remember the risk and reward for cryptocurrencies are very high. There's highly speculative, so take everything you see online with cryptocurrencies and people earning a lot of money with a grain of salt. Um, so with the question of what you should do, um, you bought it at the highs. Right now, I bet you're in the desperation phase, or you know maybe approaching relief already with how cryptocurrencies were moving recently. So it's up to you. I can't really advise you exactly what to say, but I think you should be able to make a decision by now.
I see. That was a very wonderful insight. Because of that, somebody was also wondering if there are go-to websites that you use personally to get useful information about the markets.
Um, if we keep this to the Philippine market, that's fine. Okay, so for the Philippine market, I use COL Financial. It has everything you need from charting to fundamentals. They post our COL analysts post wonderful summaries. Okay, actually, like legit though, but they do post summaries about earnings reports. They summarize um, annual reports, quarterly reports. They give you updates on target prices for companies or for stocks. They give you a breakdown on what to expect for the coming quarters or the future potential of a company. Um, Aside from that, they have the charting software with all of the gadgets that you need, all the indicators. And if you don't want to use COL Financial for some reason, there are other things, of course. There's charting software like in Investograms, or you can go directly to the company websites for you to get their annual reports or quarterly reports or any announcements for maybe acquisitions or business developments. Or you could use the Philippine Stock Exchange website, PSE Edge, to get these releases as well. So PSE Edge collates all of these announcements from all the publicly traded companies and then puts it on their website. So you could use those resources to supplement your trading. I have another question on DM. Is there a general rule in portioning your wallet that can help guide you? like the famous saying of save 15% of your salary to your savings, etc. Okay. Is there a general rule? I think again, it depends. It depends is a favorite answer of finance people in finance, but it is true. It depends. If you guys are students, I assume you guys have social lives. I mean, maybe not. It's a bit harder in the pandemic, but you guys have your own interests outside of trading, of course. You guys want to buy your favorite food every now and then, pay for subscriptions to Netflix or YouTube or something like that, or buy yourself clothes, gizmos, gadgets, whatever it is. You guys have your own priorities outside of trading, and it's up to you to decide what you want to give importance to. Personally, if you want to know what I do, from my salary, I only set aside maybe 20% for leisure use. Everything else goes into reinvestment. Okay, so maybe I have a boring life. I don't have much to use my money for, but it's up to you at the end of the day.
Oh, sir. May I ask a personal question, sir?
Sure, Anat, go
Okay,
ahead.
sir, is the season right now, kahit pandemic, sir, is it a good time to start investing or joining the stock market as a complete beginner? Or should I wait out for the everything to like cool down and go back to normal?
Okay, good question. So usually, like I said earlier, a lot of people are attracted to the stock market when a lot of people are making money, right? Late last year, so many people opened PDAX accounts or Binance, Coinbase accounts because almost every day if I watch stories on Instagram, I had friends who were posting that they were earning so much, right? So for your question, the markets are not they're not very bullish right now. They're not very good, especially the Philippine market. So I understand your hesitance in joining or starting trading, right? But there are opportunities even in weak markets like this. There are some stocks that do go up in these periods, and these stocks that are stronger than the market are they're always going to be there. There are always going to be opportunities. So is it a good time to start? I'd say yes, personally. It's never a bad time to start. So even in a weak market, you can learn, right? So understanding how a weak market operates and what you can do in a weak market. The next time after a bull market or a strong market, once it's in a weak market again, that means you've gone through a weak market already. You know what to do this time. It's not going to be your first time in a weak market. So everything's an opportunity to learn. So getting in as soon as you can is, I think it's always a good idea.
Thank you, sir.
Okay, no problem. I have another question here. How can you trade a downtrend market? Good question. So when the market is uptrending, they say that that's the easy money. When it's a downtrend market, they say that's the hard money. Okay, in my opinion, they're both hard money. Okay, but the downtrend market is harder money. So why is it harder money? So a while ago I mentioned that prices move in trends. So when price is downtrending, you can expect it to continue downtrending. So your opportunities to make a profit in a downtrend market is when you go from the lower low to the lower high. Okay, so that's a very small window, very small opportunity for you to make a profit. So with a small window of opportunity, you have a very low margin or space for mistakes, right? So with the question, how can you trade a downtrend market? I would say look for the stocks that are standing out and are not in a downtrend. Look for the stocks that are either uptrending or sideways trending that are preparing to go into a uptrend. So I think that's the best way for you to trade in a downtrend market.
Thank you for that, sir. Sir Benjamin, I too have a personal question, if I may ask.
Go
A-
ahead.
As a successful financial professional now, what are the investing techniques that you wish you have known while you were still a student?
Okay. So many things I wish I knew. So first, the FTSR framework. That's one. Uh, I used to I used to be a fundamentalist only. So I would focus on the companies with good earnings, good stories, good business models. I'd put in my money and I'd be very confident in my thesis. This company is going to grow over this amount of time because of this, and that. Uh, and then once I'm in the stock over the next few weeks, next few months, um, it wouldn't materialize basically. But I would be thinking to myself, like, I mean, it's a no-brainer that this stock is very cheap now. Maybe I should buy more, right? That's that's a very dangerous way of thinking, of course, right? If price is already telling you you're wrong, but you're steadfast in your beliefs, right? So I think that's one thing I would want to uh, teach to students is that um, the markets are very humbling, right? The sooner you learn that, the sooner that you can start growing as a trader or investor, right? So always learn from your mistakes and actively look for ways to get better as well, right? So like opportunities like this, when you learn technical analysis or fundamental analysis, so all of these are very good opportunities for you to better yourself and better your trading. Um, I think I think the biggest thing though, especially for students, is discipline. Like I said earlier, treating trading as a business. So in the beginning, I wanted to be like Jordan Belfort, just making it rain, so much money and so much time, right? But it's a business, and you really have to put in the work if you want to get good results.
I see. Thank you for that. It was really inspiring and very enlightening for me personally as well.
Okay.
So,
I hope it helped. Okay, I have another question here. Does COL Financial offer any internships or training programs? Yes, actually, COL Financial does offer some internships, but it's very seasonal and dependent on the teams that are looking for interns. Like, I think now though that the research department of COL recently closed its applications for internships. I think that was last month. But if you want to just track the page of COL Financial, there's a portion there that has job opportunities. If there are any openings, you can just wait, or you can reach out to HR of COL Financial and ask if there are any openings.
There is another. We have another question, sir. Um, how would you advise a student to invest in stocks while studying?
Investing while studying. Um, Good question. For you guys to be investing while you're studying, you need to be prepared to give enough time into your studies so that you pass or even excel in your studies, while also giving enough time to trade properly and not just throw your money anywhere and not read up on the companies or not do your due diligence, your technical analysis, just because you don't have the time because you need to get back to studying, right? So you need to strike that balance between your studies, which should be your first priority, and then trading, right? But as students, I think it's still a good idea, a good opportunity for you to trade. Maybe if you want to trade a little bit more long term or a little more, maybe even medium term, not active day trading, so that you can focus on classes if you're sitting in classes during market hours. You could do that as well. I think that would be more manageable for students.
All right, thank you, sir. Um, let's see. There's another one. This is more on general. As a student, what would be better to invest in, stocks or bonds?
stocks or bonds as a student? Well, in general, it depends on your personality. If you are more risk averse, bonds would offer a steady return on your investment. But stocks are a little bit riskier. So if you have a bigger risk appetite, stocks are definitely the way to go. But I want you guys to consider local bonds are not, they don't offer the best returns. I don't believe they give you returns that could beat inflation. So I think on average across the asset classes, bonds are well below stocks in terms of returns. So if you were to invest personally, I would tell you to invest in stocks. So I think the appeal of bonds is that you just buy it and leave it. You could also do that with some stocks as long as you do enough analysis and you know that these companies are sound and you can leave them for the long term. Then I think at the end of the day, in terms of returns, stocks should be the way to go.
May I add another one for that one since we're talking about the in general.
Yeah.
About if you're talking about crypto, what if you're going to add crypto there, crypto or stocks, which would
Okay.
you invest?
Adding crypto into the game. Crypto does have a high return, but also, like I said, very high risk. So if you look into the fundamentals, so the narrative of crypto versus the narrative of whatever company you choose to look at for long-term investment, at the end of the day, it's your decision which you believe in more. Which one would you be comfortable holding? So let's say you put in your money in a cryptocurrency. When you sleep at night, would you be thinking like, is it dropping right now? Am I losing all of my money? On the other hand, if you're invested in a stock, would you be able to sleep at night thinking, okay, I believe in this management, I believe in this product, it's going to be okay in the long run. So yeah, it depends on the person who's investing, wherever you're comfortable.
Thank you for that,
There's
Mr.
a
Benjamin.
question here. Suggestions. Okay, wait. I think there's one question in direct message. Suggestions on where or who to learn technical analysis from. Okay, so there are free videos on YouTube from the COL Financial page. Again, I'm telling you, COL has everything. Okay, so on the COL Financial page on YouTube, you can go to the playlist or the series by Juanis Barredo on technical analysis. So he goes in depth, very extensive discussions on how to identify setups, how to make trades, how to set your expectations, how to identify the potential outcomes, and how to weigh in the probabilities and everything you need to know about technical analysis. So, and these are free on YouTube. So, yeah, I think that's the best way to go about this.
Sir, about for the call financial, since I have a private message here. When will the call COL account be open to to the public?
When will a COL financial account be open to the public?
Yes.
I believe on the website the sign up is there and it's accessible. I think because of the pandemic, everything can be done remotely now. You just have to fill in some forms, provide the proper identification, and once your application is approved, all you have to do is fund the account, and then account funding can be done again remotely through any of the regular payment channels, through bank transfer or deposit if you have the means to go out.
All right, sir. Thank you.
On to the next question. We noticed that there is a good number of audience in today that are finance students, and they were wondering, do you recommend taking up the CFA program or the MBA, or maybe both? What are your thoughts about it?
Okay. For you, for the finance students, I assume that you're considering either the CFA or the MBA for your further studies. Full disclosure, I am also trying to get my CFA. currently um, currently taking my exams. I sat for my exam in May and fortunately passed the first level. So I am going on to the second level. So personally, I would recommend this path as well. But if you want to be more of in a school environment, of course, the MBA is also a good way to go. But of course, you're not limited to picking one or the other. You could do both. Um, if you want to really solidify your financial knowledge, you can do both. If you're just trying to get a feel for the markets or just to hone your skills, I wouldn't say they're extremely relevant. But then it does add some how do you it does add credibility to the things that you do, especially if you want a career in finance.
I see. Thank you very much for that. Someone private messaged us and they were wondering, do you recommend Wall Street bets as a credible medium of stock information?
Do I recommend Wall Street bets as a as a source of information? Um, I cannot say that they are not relevant because they do cause a lot of price movement, right? They're a big enough community to have influence over stock prices. Do I consider them reliable? I think like any other platform that is not exactly regulated. So it's kind of like a social media platform. It's like asking, would I trust a random tweet or a random post for financial advice? I think you should take everything with a grain of salt. Do your own due diligence. Some individuals on Wall Street bets or some on Twitter, they're actually very intellectual. If you read what they say and do your own due diligence, you check the facts. What they're saying is actually very helpful, actually. So you could use it as a source of information, but do not take it blindly. Okay. I've read through some. I've gotten some insights from posts, but always do your own due diligence so that at the end of the day, if you trade and things don't go your way, you can own up to the mistake. It's your own fault. You did your own due diligence. You can't blame anyone else. So yeah.
All right, sir. Thank you. We have another question, sir. As as a professional investment analysis, what are your morning routines that you do that is in line to do your job well?
Again, sorry, come again.
What are your morning routines that you do that is in line to do your job well?
Morning routines. Okay, so personally, I trade local and the U.S. market. So in the morning, I prepare for both the local market and the US market. So it's just screening, going through charts on my focus lists, or going through. So for the Philippines, you have around 300, less than 300 companies for you to chart, but significant companies for you to chart, maybe 100 actively traded companies. So just chart everything, just look through everything, just click, 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 look at all the charts, which stocks are moving, which are on uptrends, which have potential setups. And then essentially you're prepared for the next trading day. Same thing for the US. It's a bit more extensive, but you just have to narrow down your search into what you're looking for and then chart everything. But also, again, technical analysis is only one part of trading. So right after technical analysis, you get those companies, the select companies with proper setups, and then you try to do your research on their fundamentals. So what does this company do? Are they earning? Are they not earning? Can they grow in the future? Is it sustainable? Things like that. Everything about the fundamentals of a company. After that, you just prepare to trade. Make your plan, and once the market opens, all you do is execute. Okay, so you don't deviate from your plan. Very rarely should you be making decisions while the market is open. And then when the market closes, you review what you did for the day. Did you follow your plans in all of the trades? What went wrong? What could have you done better? And then you incorporate that into the next day. Yeah.
All right, sir. We have a question from the chat box. What are your thoughts on the GameStop incident?
GameStop incident. Okay. Probably this question came from the same person that used Wall Street Bets, maybe. But so for those of you who are not familiar with the GameStop fiasco, GameStop is a company in the States that was heavily shorted by institutional investors. So shorting means you are selling a stock ahead of buying it. So basically you are borrowing shares, you are selling them in hopes of prices going down in the future and buying it at a lower price. So it's basically loaning shares to make a profit. Okay. So it was heavily shorted by institutions, and then individuals on Wall Street Bets, which is a forum, I would say a forum on Reddit, realized that it was heavily shorted and decided to purchase the shares of GameStop in order to push prices higher. So why were prices going up? So when you short a stock, there is an amount of time that you are given to cover or buy the stock. So you can't borrow forever. So eventually you have to buy. So because so many people were buying GameStop and holding it, these institutions were forced to buy back or cover their shorts at much higher prices. So the stock rallied hundreds and hundreds of percent over a few days, over a few months, I think. So what do I think of it? Personally, it was wild what happened. I didn't think I would experience something like that in my times in the financial markets. But is it? I assume your question is, how do I feel? Like, is it illegal, or how do I feel about it? Is it good? I wouldn't say it's bad or good. I think it is something that could happen. It's one of the risks that you take, especially when you're shorting a stock. Remember that the upside for buying is unlimited, but the downside is 100%. But the downside of shorting a stock is unlimited, while the downside the downside is unlimited, while the upside is 100%. So if you're shorting, like what these institutions are doing, you should be prepared to face the consequences when things don't go your way. But with the actions of Wall Street Bets, they made the most out of an opportunity. So that's just what everyone else is trying to do in the markets.
I see. Thank you for that, sir. I think we have room for 1 to 2 more questions. So I got a direct message. They also were wondering about, what are your thoughts on investing in crypto or in non-fungible tokens? Have you tried investing in them personally?
Okay. Personally, I do not. For NFTs and cryptocurrencies, for NFTs I do not. For cryptocurrencies, I have tried to dabble, but only for fun, because I am a fundamentalist and I'm not too. It's not my cup of tea. Let's just say that. So, what do I think of them? I believe the narrative is very powerful. The goal of becoming the future, digitizing almost all assets. I believe that there is some merit to these things, but I do not think it is to the degree that some people are selling it at. Okay, but there is always a chance, of course. Like, I wish I could tell the future, but there is a. Personally, I'm not sure how this would turn out. So I think for these, it's up to you, your conviction on the narrative, how much you believe in these narratives, and if you're willing to risk your money in these things, then I believe that should be okay. But just remember that high risk, high reward. Yeah, you just have to own up to things if things don't go your way.
I see. Thank you for very much for those insights, Sir Benjamin. Unfortunately, we don't have enough time anymore to answer any more questions. Nonetheless, we would like to thank all of you for all of your wonderful questions today. We would also like to deeply thank Mr. Benjamin Imperial for a truly insightful and engaging discussion on the basics of technical analysis and more, and the proper use of it when finding stocks. I would also like to remind our students to answer the ARF form that will be sent in the chat box in order to evaluate this seminar afterwards.
With this, we would like to present this certificate of recognition to Mr. Benjamin Imperial for his grateful recognition and sincere appreciation for sharing his valuable knowledge and insights for the Finding Stocks 102, given this 13th of August 2021 at De La Salle University, Manila. Thank you. We'd also like to ask if you have any last words for our students, Mr. Imperial.
Again, thank you for this opportunity to give my insights and learnings, experience to this audience. I hope you guys were able to learn. Again, this is just the tip of the iceberg, let's say, for technical analysis. So it's a tip of the iceberg for technical analysis, and technical analysis is only one part of the entire FTSR framework. So it's a long journey ahead, but it's good to get started, right? So progress is progress. So I hope, I wish you guys the best of luck in your journeys in the financial market. And yeah, I hope everything goes well.
Truly insightful you have there, sir. And before we end this event, may we request for everyone to please turn on their cameras for a Zoom fee with our speaker. All right. Don't be shy to turn on your cam. If there are any difficulties, kindly chat us. All right. We see some audiences turning on their cameras. We'll give them 10 seconds. All right. All right. Let's take a picture. Hold on. Someone's still turning on their cameras. Right. Right. Let's have a Zoom fee. 1, 2, 3. Next page. 1, 2, 3. Next page. 1, 2, 3. Next page. 1, 2, 3. And last page. 1, 2, 3. And we're done.
Thank you, guys. Thanks for coming.
Once again, thank you, Mr. Benjamin Imperial, for that wonderful talk. We truly learned a lot today. And with that said, let us give Mr. Benjamin Imperial a virtual round of applause.
Before we end this program, let us thank our partner for this event by watching this clip from COL Financial.
Why do we go beyond being just an online stockbroker? Why do we educate millions of Filipinos how to better their lives? Why do we share our expertise? Why do we keep coming up with new ways to empower you? It's because we believe that every Filipino deserves to be rich. This is our why. It's why we do what we do with passion and integrity at all times. It's why we're committed to guide every Filipino in every step of their investing journey towards a richer and better tomorrow. Call Financial for a richer life.
Right. Now may I call on Mr. Kenneth Rojas for the closing prayer.
All right, everyone. So let us remember that we are in the holy presence of God. All together are the Sallian prayer. I will continue, O my God, to do all my actions for the love of you. Saint John Baptist de la Salle, pray for us. Live Jesus in our hearts forever. In the name of the Father, Son, and Holy Spirit. Amen.
Once again, I'm your host, Shane Alvarez, and together with me are Andre C., Christian Peralta, Trixie Tagabukba, Kenneth Rojas, Miko Tancinco, and Audrey Reyes.
Thank you everyone for attending today's webinar, and we hope you enjoyed today's session. Please stay safe and have a good day. Goodbye and have a nice evening.
Thanks for coming, guys.
Thank you, Sir BJ.
Thank you very much, Sir BJ.
Thank you for inviting. I hope
Yes,
it
sir.
was a good talk. Can I ask them for if you guys recorded it, can you email the link or the file?
Sure, sir. Sure, sir.
Okay,
For sure.
Send you the email.
thank you. Congrats on the event.
Andre.
Thank you, sir.
Thank,
Thank you, sir.
Bro. Bye.
thank you as well, sir.
Thank you.